Hello everyone. Welcome to the Stock Minds web channel. In the rapidly evolving landscape of warehouse automation, Symbotic, Nasdaq SYM, has emerged as a prominent player, delivering innovative AI-powered robotic solutions to major retailers. Despite recent stock volatility, the company's robust financial performance and strategic partnerships suggest significant growth potential. In this video, we will dive into Symbotic's recent earnings, stock performance, valuation, growth prospects, and associated risks to the company. About Symbotic. Founded in 2007 and headquartered in Wilmington, Massachusetts, Symbotic specializes in automating warehouse operations through advanced robotics and artificial intelligence. The company serves a diverse clientele, including industry giants like Walmart, Target, and Albertsons, by enhancing their supply chain efficiency and accuracy. Symbotic's autonomous robots are designed to navigate warehouses dynamically, optimizing storage and retrieval processes without the constraints of fixed routes. Symbotic financial performance. Symbotic's financial performance in Q2 2025, which ended in March 2025, highlights its strong growth momentum, with quarterly revenue reaching $549.65 million, a 39.74% increase from $359.94 million in Q2 2024. Despite this top-line growth, the company reported a loss of 4 cents per share, slightly higher than the 3 cents loss in the same quarter last year, representing a 33.33% increase in net loss. On a trailing 12-month TTM basis, revenue surged 42.16% to $2.07 billion from $1.33 billion a year earlier, while the TTM EPS improved significantly, narrowing the loss to 9 cents from 28 cents, a 67.86% improvement. Free cash flow per share also experienced substantial growth, rising 173.02% year-over-year to $3.44 from $1.26. The company posted a gross profit margin of 16.33%, a modest net profit margin of -0.45%, and a strong free cash flow margin of 17.44%, reflecting solid operational efficiency despite ongoing losses. Importantly, Symbotic operates with no debt, providing flexibility for strategic investments and expansion. Over the past 5 years, Symbotic's revenue has grown at a 108% CAGR. The company is still not profitable, with negative net income. Free cash flow has fluctuated year to year and turned positive in 2024. Symbotic 2025 financial forecast. Looking ahead, analysts forecast the company's revenue will increase by 20.84% in 2025 to $2.2 billion from $1.78 billion in 2024, although they expect non-GAAP EPS to decline 77.53% to 25 cents from $1.12 in 2024. Nonetheless, the average analyst price target of $29.25 with buy rating, suggesting an 18.18% upside from current levels. SYM stock price performance and valuation. At the time this video is created, Symbotic stock is trading at $24.75 per share. Over the past year, Symbotic stock has declined by 39.1%, significantly underperforming the S&P 500's gain of 11.9% during the same period. Since its IPO in June 2022, the stock has increased by 47.3%, though still underperformed the S&P 500's 54.2% rise over that timeframe. Despite this recent underperformance, the company's current valuation metrics suggest that the stock may be undervalued. Symbotic is trading at a trailing 12-month price-to-sales PS ratio of 1.29 and a forward PS ratio of 1.21, both of which are relatively modest for a high-growth technology firm. Additionally, its price-to-free cash flow PFCF ratio stands at an attractive 7.44. If we look at the valuation over the past 2 years, Symbotic has been trading at a significantly lower forward PS ratio with an average of 1.55, yet the company continues to grow its revenue rapidly. These valuation figures, when considered alongside the company's robust revenue growth and strong cash flow generation, indicate that Symbotic may offer a compelling investment opportunity at the current price. Symbotic growth potential. Symbotic's growth prospects are bolstered by several factors. 1. Strategic partnership with Walmart. Symbotic has significantly strengthened its strategic partnership with Walmart through a comprehensive $520 million agreement aimed at advancing automation in Walmart's accelerated pickup and delivery (APD) centers. This collaboration includes Symbotic's acquisition of Walmart's advanced systems and robotics business for an initial $200 million, with potential additional payments up to $350 million contingent on future system orders. Under this agreement, Symbotic is tasked with developing and deploying AI-enabled robotic solutions to enhance Walmart's in-store fulfillment capabilities. The plan involves implementing these systems across 400 APD centers over several years, with Walmart retaining the option to expand this deployment further. This initiative is expected to increase Symbotic's future backlog by over $5 billion and expand its addressable market by more than $300 billion in the U.S. alone. 2. Expansion to Mexico. Symbotic has strategically expanded into the Mexican market through a partnership with Walmart de Mexico, Walmex, marking a significant milestone in its international growth trajectory. Under this agreement, Symbotic will deploy its advanced warehouse automation systems in 2 new greenfield distribution centers near Mexico City. To facilitate this expansion, Symbotic has established a new business entity, Symbotic Mexico, aimed at serving customers in Mexico and tapping into the growing demand for warehouse automation in the region. This venture is expected to add approximately $400 million to Symbotic's backlog, reflecting the substantial scale and potential of the project. 3. Rapid industry growth. The global warehouse automation market is rapidly expanding, projected to grow from about $21.81 billion in 2024 to $95.45 billion in 2025, expanding at a 15.9% CAGR. The growth is driven by factors such as rising e-commerce sales, labor shortages, complex supply chains, and consumer demand for faster delivery. Innovations like warehouse execution systems, voice-activated technologies, and real-time analytics are making warehouse operations faster, more accurate, and sustainable. The growing market are fueled by the adoption of AI, machine learning, and sensor-driven monitoring to optimize throughput and reduce errors. This robust growth environment offers Symbotic significant opportunities to expand its market share by leveraging its advanced AI-powered robotics and software solutions to meet the evolving needs of retailers and logistics providers. Risks to consider. While Symbotic presents a promising investment opportunity, potential risks include: 1. Accounting issues. Symbotic disclosed material weaknesses in its internal controls over financial reporting in November 2024, revealing premature expense recognition and errors in revenue recognition related to unbillable cost overruns, which affected revenue for the first 9 months of 2024 and led to restatements of multiple quarterly financial results. The company revised its fiscal first quarter 2025 revenue guidance downward to between $480 million and $500 million from between $495 million and $515 million, and adjusted EBITDA expectations were cut to between $12 million and $16 million, from between $27 million and $31 million. These disclosures caused Symbotic's stock price to drop nearly 40%, while also triggering a securities fraud class action lawsuit alleging improper revenue acceleration and misleading investors. Symbotic is currently working to remediate the internal control weaknesses and improve its financial reporting processes amid ongoing investigations by shareholder rights law firms. 2. Customer concentration risk. Symbotic's customer concentration risk is primarily driven by its heavy reliance on Walmart, which constitutes a significant portion of its revenue. This dependency has intensified following Symbotic's acquisition of Walmart's advanced systems and robotics business in January 2025 for $200 million, along with Walmart's $520 million investment in Symbotic's AI-powered robotics platform. This deal not only deepens the partnership but also potentially adds over $5 billion to Symbotic's backlog, underscoring Walmart's confidence in Symbotic's technology and growth prospects. While this relationship provides Symbotic with a substantial and secure revenue stream, it also heightens the company's vulnerability to fluctuations in Walmart's investment decisions or operational priorities. Any reduction in Walmart's orders, shifts in strategic direction, or adoption of competing technologies could materially impact Symbotic's financial performance. The concentration risk is further amplified by the fact that a large share of Symbotic's revenue, over 90%, comes from systems deployed primarily for major customers like Walmart. 3. Capital-intensive business. Symbotic faces significant financial and capital risks, primarily due to the substantial capital investments required to support its research and development, facility improvements, and business expansion. The company's growth strategy involves continuous innovation in AI-powered robotics and warehouse automation, which demands ongoing and sizable funding to maintain its competitive edge and scale operations effectively. Symbotic's future capital requirements remain substantial and uncertain. The company's growth trajectory, expansion of sales and marketing efforts, research and development spending, and potential acquisitions will all influence its funding needs. Conclusion: Symbotic stands at the forefront of warehouse automation, offering innovative solutions to major retailers. Its impressive revenue growth, strategic alliances, and technological advancements position the company for sustained success. While challenges exist, the stock's current valuation and growth potential make it an attractive consideration for investors seeking exposure to the automation sector. But remember, this is not a financial advice. What do you think about Symbotic? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.